Hello traders, hope you are fine, hope you stay home and safe. Welcome to another video, and this is a Bitcoin update. We have this pretty clear zone on the daily, and we can expect a reaction when the price reaches this zone. If the price reaches this zone, because we don't know if the price goes up to that range. Yesterday we had a bullish daily close, guys. We have this bullish engulfing structure. This candle's body engulfs this previous candle's body, okay? Usually after a downtrend, if you have a bullish engulfing, it is a sign for a reversal. In this case, we had a small retracement. So in this case, I would say might go higher, but it is not a guarantee for that. So this bullish engulfing is a sign, but not a guarantee, okay? This zone, guys, we can expect a nice reaction if the price reaches that zone, because after the zone had formed, we had a strong move down, right? And the theory about supply and demand zones, the old school theory, says that if the price comes back to that range after a strong move, if the price comes back to that range for the first time, you can expect a nice reaction, okay? I agree, it is true, but I also want to add that I want the zone to be fresh. So on the daily time frame, I don't want the price to visit that range again after 1 year, okay? The zone has to be fresh. The daily time frame, we can speak about a month or so, 30 days. It's not a strict rules, it can also be 40 days, but just to have a structure in your trading supply zone here, you want the price to visit that zone after a certain period of time, not after too long later, not after 1 year or so, because the theory is that whales have placed orders here, sell orders, and if they have remaining orders left that they want to place, they don't want to wait 1 year, right? They want to the price to come back to that range so they can fill their remaining orders and then continue with what they want to do. That's it. Hope it was clear. And let's look in the 4-hour chart, guys. Yes, this zone is pretty clear, right? Up to 8,200, around that here, 8,100 and 75, something like that. This is the zone where we can expect a reaction if the price reaches that zone. Yesterday, we tried to short Bitcoin. I posted the trade, if you remember. My stop was above the supply zone. Entry was somewhere here. I did enter a bit early. And what happened is price has shown good reaction first. It dropped around 5 or 7% depending on your entry, and reached this RS range here. And then what happened is it started to go up again. So I gave a warning. I said, guys, be careful. It is coming to the entry price. If you didn't take profits here, guys, what you should do in such a case is if it looks strong, as if it would take out your stops, you close the trade. You close the trade at break even to prevent loss. This is how trading works. You try level for level. So when you see that the supply zone here is about to fail, then what you do is, guys, you try to close the trade at break even or before that with a small profit to prevent loss. And that zone had been invalidated after the price went above it, but we have this supply zone currently. This is the current supply zone, guys, okay? As you see, the price struggles there. And let's put a trend line here, up on here. Rally, base, rally, demand here. I would try to long if the price comes to this range with a tight stop below this demand. Something like this. Let's say the trend line gets hit there. I would try with a tight stop to long up to here for an 8-hour trade. Other than that, guys, most people who tried to short yesterday are now expecting a move higher because we have this gap here. Okay, if we break this supply zone, it is also possible that the price moves up higher up to these zones here. We have a zone here in the 30-minute chart, then the next zone start up here and up to 8,000 here, 200 or so. The thing is, you don't know, guys. Now that everyone's expecting a move higher in a small time frame, okay, the next days, most people expect a move higher because it looks like that. Sell orders are being consumed right now. So this is why people now expect a move higher. And when the people expect that, it is also possible that Bitcoin surprises us again and drops earlier from here even, or maybe it takes out this high around 6,900, this high here, and then drops. It is possible. Personally, I will look for a sign, something like a pin bar candle. If you have watched my pin bar explanation video, then you would know what I mean. It is a good sign for a reversal if you have a candle like that. Some might call it swing failure pattern, whatever. The pin bar candle, guys, let me explain to you real quick what it is and why it forms. So let's say you are a whale and you want to place sell orders. So whales sold here, okay? This is why the price went down. But they might have still sell orders left because they cannot sell all at once because they don't have buy orders in the market. If you want to sell, what you need is buy orders, liquidity, right? So what they do is they take profit here, causing the price to reverse. They take profits off their shorts here, okay? They take profit from parts of their positions. Let's say they sold here and then they close parts of their orders because they want to place more sell orders at similar price. At the similar price here, when the price reaches this zone, they fill their remaining sell orders because now they have buyers again because people, the retail enters again. So now they have enough buyers again and they sell. So now let me explain how pin bar candles come into existence. Let's say you see a candle like this, guys. It's a nasty bullish candle, right? A big dildo candle. And this candle forms because of more buy orders in the market than sell orders. Okay, everything, guys, all the moves here are because of imbalance. So this means you have more buy orders entering the market than sell orders. This is why the price goes up. Here you have balance, so consolidation. The amount of buy and sell orders are equal, you know, the price consolidates, and then again you have more buy orders entering the market. This is why the price goes up. And then when the whales sell up on this, because there are buy orders, enough buy orders now, they can fill their orders. You understand? So then they sell, and here when you see a candle like this, guys, it means that there are more buy orders in the market. That means for the whales, now they can fill their sell orders because they have the liquidity, they have the buyers, and then the pin bar candle forms. You understand? They sell because they have the buyers now. People FOMO, okay? Price goes up and then they sell. And this pin bar candle comes into existence like that. And there are two types of pin bar candles, okay? I will explain that. I mean, two reasons why pin bar candles form, not the two types. I don't mean the bullish pin bar candle and the bearish pin bar candle. I mean there are two reasons why these candles form, and I will explain that in a video about pin bar candles in a more detailed one. But depending on the reason why this candle formed, we have expectations, different expectations. So in both cases, we can expect a reversal, but the difference is how big the reversal will be, okay? Let's just let me give you a small detail. It is about placing new orders or taking profits, guys, okay? When whales take profits, let's say they are in long positions and they take profit, so they sell part of it, then you can expect a small reversal. But if whales place new orders, so they place new sell orders because they want a reversal, then you can expect a huge market reversal, okay? That is the difference. And these two reasons also apply to supply and demand zones. This is also the reason why ranges form in the market. And when you have a range, guys, you usually have a swing high and then a swing low, and then again at similar price you have another high and then again a swing low at similar price. This is so, guys, because the whales, when they enter a position, they cannot fill all their orders because not enough liquidity. So what they do is they take part of the profit and then the price reverses again back down, and then they fill their remaining positions at the similar price because they want to buy at one price actually, but because they don't have enough liquidity, what they do is they take some profits off, bring the price back down to their entry, buy more, and then maybe do that 2 or 3 times. This is how ranges come into existence, guys. Hope that was clear. I don't want this video to be too long. Let's continue with the 10-minute time frame. Today, I went out with family, guys. I missed the whole price action here. Because after 1 week staying home, you get crazy. Right, guys? You understand that this quarantine is something new for us all. Let me remove everything here first. This is where we did short yesterday. Let's look what happened today. Let's look at the price action in the small time frame. This is the 10-minute now. Range high, swing low. We have this range here. And I think the eagle eyes among you already see this here. Yep, exactly. A pin bar candle with confluence at the range high. And what happened is the price did visit the mid-range. After that, this demand zone to be accurate. And yeah, guys, this is how pin bar candles can be used to enter trades. I'm not talking shit to you. You had the confluence here. If you remember what I explained in the video, you need confluence. You had the confluence here, range high, pretty clear pin bar candle formed. It even gave a retrace entry, and then let's say you put your stop loss above the wick, because that's what we do, and then you take the closest target, because yeah, we expected Bitcoin to go higher, right? We didn't expect it to go down, so we take a close profit zone, not far away. I mean, you could have tried this as well, but more realistic was this. So you would still have gotten a around 10 hour trade with this entry here, which is not bad after this pin bar candle. Alright, hope you enjoyed the video. I hope you are all well, guys. Take care of yourself. I already mentioned on Twitter that I would try to long something like this, maybe. Hold on. I think I made it like this, yeah. Because we have a small rally, base rally, and then, yeah, if the price comes back here to this trend line, it is, yeah, it might be a good entry for a long position if you place a tight stop here. Of course, in a smaller time frame, you can also look for a pin bar candle, okay, somewhere here in a smaller time frame. You can look for something like that, because you can use pin bar candles also on trend lines. Okay, you can also use them on trend lines. It is the same as on RS ranges or Fibonacci levels or trend lines. You can also use them on trend lines. So this would be a long entry I would try to take, to be honest. And if the price goes higher than this, then it would be nice. If not, I would take some off here. And then depending on the reaction, guys, depending on the reaction here, again, I repeat it, if you get something like a pin bar candle, and then I would try to short, but not before that, because this gap is risky as fuck, okay? Price can go higher. That's it. I hope you enjoyed the video. See you soon, guys. Have a good evening. Bye bye.